How to invest in this scary market. Most, if not all, economists are predicting a worldwide recession within the next few months to years. This recession will have a devastating effect on a third of the world's population. Many investors are scared, and with the recent collapse of FTX and the bank run on Blackstone, people don't know what they should do with their money. It is crucial that you invest your money wisely with the market's turbulence and the prospect of an even deeper recession on the horizon. Hi, and welcome back to another video of Finance Sense, where we cover all the latest trends in the financial markets and the economy. While one can never be fully prepared for a looming recession, it's always wise to prepare for the worst. In this video, I'll be discussing how you could weather the coming recession by enumerating the ways you can invest in the scary market. But before we start, make sure to like this video, subscribe, and click on the notification bell to stay updated with our videos. Now, let's get to the video proper. The worst is yet to come, and many individuals will experience a recession in 2023. Evidently, this year's recession will affect a third of the world's population, primarily the developed countries. This comes on top of 2022 being a terrible year for investors since, regardless of where you placed your money, it's likely that you didn't do very well. Furthermore, even if you did not invest your money, you would have still lost 7.1% due to inflation. But if you had made an investment, you would have lost more than 20% in the stock market, which is absurd because bonds are meant to rise when stocks do. But inflation is bonds' Achilles heel, and that's why they suffered their worst year ever, dropping 15%. The real estate market fared relatively well, although it is now more expensive to purchase a home and obtain a mortgage due to rising interest rates. Additionally, U.S. lenders will now have to pay the Fair Isaac Corporation, often known as FICO, 400% more to get our credit scores. Therefore, starting this year, the average house buyer will have to spend up to 91% more to obtain their credit score. Given that Bitcoin is down over 47% and the metaverse and NFT bubbles have burst, the age of free printer money is officially over, and investing in cryptocurrencies was clearly a bad idea. Nevertheless, saving money remains a primary focus. According to a survey conducted by Bank of America, 44% of Americans have stated that their New Year's resolution is to spend less and save more money. Investors and the Federal Reserve are on a collision course. This implies that Jay Powell will not be lowering interest rates this year. Keep in mind that interest rates act similarly to the force of gravity by bringing down asset prices. While we can't change the situation, we can influence its effects on our finances by saving more money. First, with interest rates skyrocketing, credit scores are set to become extremely important. You don't want to pay too much for a loan just because you didn't put in the effort to increase your credit score. One of the first steps someone should take is to obtain a free credit report to determine their actual credit score. Now, there are a ton of websites available on the internet claiming to provide this information and to be associated with the government, but the majority of them are fake, so exercise caution. The consumer.ftc.gov website is the only one that is authorized to display that information. You can navigate directly to the page that shows the annualcreditreport.com. This is the only website authorized by the federal government to provide one free credit report each year. You may, however, obtain one free credit report from each of the 3 credit bureaus, Experian, Equifax, and TransUnion, each week if you reside in the U.S. Therefore, especially if you are attempting to purchase a house, you must start improving your credit as soon as possible while still saving money. Second, because the period of high-yield savings accounts has returned, you may open one to start earning money in your bank account. Banks now pay between 3% and 4%, but this information is continuously being updated, so do your research and decide which ones you prefer. Investing in bonds is another approach to make sure that the money in your bank account is genuinely being used to generate income. You may have seen some ominous headlines such as 2022 has been the worst year on record for bonds and the like. However, if done correctly, bonds cannot cause you to lose money. This is true because a bond is nothing more than a loan you're making to someone else. Since the United States government has never missed a payment on a loan it has been given, the someone else should almost always be the U.S. government. Money loaned to the government has always been repaid. Once you've made the loan, the bond will begin to pay you interest every 6 months or twice a year. Now, every bond has a maturity date, also known as the duration of the money you loan to another entity. When the bond reaches its maturity date, you will get the initial investment plus any accrued interest. The interest rate will generally increase the longer you loan the money, although this isn't always the case. If you do not intend to invest your money for a year at a time, there is a shorter-term option, the 6-month Treasury bond. The current interest on this investment is 4.8%, which is still greater than the yield for 99% of all savings accounts ever known. So, after 6 months, you will receive your money back plus interest. It benefits both parties equally. Third, increase your 401k contribution to get started saving money quickly. This investment yields a 100% return. Those that are employed are already aware of this. However, if you are self-employed, you may not be aware that you may perform this task using Robinhood's new feature. The way it operates is that you fund an IRA or individual retirement account by connecting an external bank account. Using the funds you deposit in this account, you may now begin investing in things such as stocks, bonds, and ETFs. However, cryptocurrencies are not included. This account cannot be used to purchase cryptocurrencies, and rolling over a previous IRA will not qualify you for the bonus. But this is how it works. If you're able to contribute the entire $6,500 annual maximum, then the extra $65 or 1% will not count toward your contribution limit. There is no need for concern because this is only the interest payment. But there is a significant disadvantage. The disadvantage is that it takes 5 years to earn your interest back. Thus, if you contribute $1,000, for example, the 1% implies that you will receive $10. But you won't be able to take that $10 until 5 years have passed. And this applies whenever you receive the bonus each and every year. You'll have to pay fees if you try to cash out your interest before the 5-year period is over. Fourth, you may boost your savings by increasing your income and decreasing your expenses. Now, experimenting with new ways to save money is a lot of fun. You just need to look around and see who else is out there offering similar services. Simply give several providers for your internet, phone, and insurance a call to see if they can provide you a better deal. Even if they can't, your current service provider will likely come up with an incentive for you to stay. Furthermore, having a few side businesses is a terrific way to earn some additional money. You may sell products on eBay or Amazon, or you can offer your skills through TaskRabbit, Airbnb, Uber, or Lyft. You may also get in touch with your favorite YouTubers and, if they run an informational or educational channel, give them a weekly newsletter that contains a summary of all of their content. Having a weekly newsletter is a goal of any creator since it allows them to stay in touch with their fans and grow their subscriber base. Fifth, since debt repayment offers a 100% return on investment, you may actually want to start doing it to save money quickly. Also, make the most of your credit card points and benefits. Get the greatest cashback credit cards, and you should also consider opening an HSA, a triple tax advantage account that is perhaps even better than an IRA. It appears that we have reached the end of this video. Thank you for watching this far. Please subscribe and give a like if you enjoyed this video and comment your thoughts below. This is Finance Sense, helping you keep up with all the latest trends in the financial markets and the economy. See you next time!